Buongiorno from Italy. Welcome back to the channel. All right, so the lighting sucks, but let's get into today's video from Italy, left Australia. Here we are. We've got a lot to cover today. We're looking at the Fed minutes, how that has affected the stock markets. What does that mean in the medium to longer term, looking at our 18.6-year cycle. So remember, we're looking at the macro. And then, of course, we're going to dive into Bitcoin and cryptocurrencies. So I've got a lot to catch up on. Haven't done a video in 48 hours. So just 2 days. I've been traveling all the way from Australia to Italy, and I'll be traveling again tomorrow, but we've got to get into what we need to look at to catch up on all of the news, because there seems to be a lot of headlines about, stuff still needs to get a hell of a lot worse, and things are looking down with all of the talk of the interest rate rises. So enough of these hands in Italy. Make sure you like, subscribe, bell notification icons, links in the video description for Twitter and Instagram, just the official stuff. And of course, Bybit, $4,450 of sign-up bonuses using that link down there for your extra sign-up bonuses. So I've got Bitcoin on the chart here. Let's quickly have a look at the Fed minutes. This is the big thing that's happened over the last several hours. Fed minutes point to more rate hikes that go further than the market anticipates. So the Fed looks like they are talking about more interest rate hikes later this year. So what I'm thinking is, if people haven't factored that in, investors haven't factored that in, you'd expect the market to drop on this sort of news, get extremely fearful. We haven't seen that just yet. The markets are, of course, open at the moment. Go into the daily chart here. They've moved up a little bit, but I would have expected a lot more volatility in the market if they really hadn't priced in much more severe rate hikes this year. So I think they're probably getting the pricing in relatively okay. Now, I did have it on a monthly because I'm looking at the macro view here for the Dow Jones, NASDAQ, S&P. Important to cover all of this for our holistic view as investors. So Dow Jones still holding up. So we've got this yellow line here. This is macro, big time frame. We'll look at the macro and then we'll get into the small stuff for Bitcoin and cryptocurrencies. Remember, the titles around Bitcoin versus the Fed. Bitcoin's looking all right, and any of the stuff to do with the Fed at the moment just doesn't seem to be affecting it too much. And then, of course, I'm looking at this sort of bull run happening on crypto. We've covered this on the channel heaps, so I'll get to that as well. So anyway, with the Dow Jones, monthly hasn't reached a technical bear market yet. Regardless, you know my thoughts on this stuff. It's just talk. It's names and words out there for people to get super caught up on, forget what's actually going on, and miss the boat altogether. We're at 19.75% down. The 50% level, which is the most important part that we look at, is at 27,500 points for the Dow Jones. Still a fair way away from that. The NASDAQ, it is passing that major 50%, but it's just bounced back above. But I'm giving the NASDAQ more tolerance because we know in the second half of the real estate cycle, if I bring that up now, this is where we are. We know that this first half is really positive for tech stocks, the tech sector. It has a very hard time during the correction, which is what we're going through. And in terms of the performance for tech and traditional stocks, tech's not going to perform as well. We know that from the 200 plus years looking at the 18.6-year cycle. So the second half, getting through that to kick on from this point. So this is all looking pretty okay. Down we go. And for the NASDAQ, we've still got a fair bit of room to move should this thing continue to fall. I would be getting concerned, like we've looked at here since earlier this year, since about January, February, if this market was to crash below the 9,000 point level. That would be quite concerning for tech, but we're not there yet. We've still got a fair bit of room to move. Remember, this is macro. I know people are like, how can you even talk about those numbers? Guys, it's macro. You've got to look at the larger term support and resistance. S&P is still holding up above 50%, so 3,500 points. Remember, we're looking at all this stuff because of what the Fed said. They're expecting more interest rate hikes, currently sitting at sort of a target rate of 1.5 to 1.75. The Fed here is at 1.58. S&P still holding up all right today. Monthly's fine. 3,500 points still hasn't even been tested. So even if the S&P gets to 3,500, I'm still pretty comfortable and very, very solid in this market. If you get spikes underneath that and then closes above it on the monthly, that's fine too. In terms of the pricing, 3,500 points, I'm still all systems go for second half of the cycle to be pretty stellar. Now, looking at the fear and greed for cryptocurrency. So we've covered the macro and the traditional markets. Looking at the fear and greed here, we're looking at the market being the least amount fearful that it has been in the last 2 months. So this is one of my posts about Bitcoin, but just posting this on Twitter, which is why I say follow Twitter. The links are down there. It's so much easier to update everyone on Twitter. Looking at this fear and greed, so just up here, so these little posts here, this is the least amount of fear that the market has seen. So with that in mind, I'm expecting Bitcoin to have risen. So that was how many days ago now? 5th, so a couple of days ago. 18.18, this is above our buy level. So we're sitting here at 19, then 18.18. You can see that these lows were all below the 15 level, which is what our buying plan, that fear and greed buying plan is for Bitcoin. Sitting above that now, so no more buy opportunities in terms of that plan. If you've missed it, don't worry, stick around on the channel. I often update that here as well. Bitcoin, this is the goods. The climb, the slow grind up, going back to these posts here on my Twitter, which were from days ago. The first one was dated on the 30th of June, looking at that target level for Bitcoin, the battle here. Bitcoin 19,700 is the battle right now, and then back on the 30th, this is what we're looking at, 19,700. So that the previous support was 97, it just broke down. We knew 18,900 was coming up just based on previous support and resistance. So it's this yellow line right here. And look at that, it's bounced very, very cleanly from that in a macro sense in terms of trading. So we got the 4 hour, bounced off that yellow line, that's what we're looking at, and we've just basically climbed all the way up. Now, of course, the volume is slowing a little bit, but it is getting a little tighter in the trading ranges, so I'm expecting that. And for a bullish move for Bitcoin, so we've got the background here, everything's looking dandy for now, this shorter term. Market seems okay. I still think there'll be a downside, but that's going to come in months to come. But looking at the trading just for now, this volume is just starting to pick up as we rise to test the previous resistance level, which was at 20,700, and that was also previous support before the market broke down on the 28th of June. So there's a little support back here, a little bump, and then it dumped from that point. So I see it testing this level. That was the breakdown here. We looked at that back on the, even in late June, because of this little zone here. If you remember those videos, I was circling underneath here as a bit of a swing bottom for stops, based on, I thought that would be a key level for any trades. If it was to break down from that point, you're probably looking at further downside. In the videos, it was all in the videos, that was a key support level for long trades. We didn't get the long that we're looking for, and of course the market broke down, went further. So now we've basically come all the way back to that level to test it. You can see how cleanly that number has worked out. 20,700, 19,700, that's been cleared now after that quick scare bar underneath and back up. The last videos I did were around that point. So the market broke down, then actually got back above that 19.7 level. So yeah, I think we are on the verge of testing just above 20,700 if we can get this volume to pick up a little bit more so those buyers can come through and take out those tops. Now the other thing for the resistance, let's go back to the daily. You can see the tops here. Look at this, beautiful, beautiful top here, and now we are coming to test that level once again. I'll get rid of this 50% level. We know that that is important. 19.7 is the important level. And you can see this yellow diagonal. So some will look at this on a macro, a larger time frame again, a more macro look, and say, well, this is a bear flag. So you've got the big pole going down, and then you've got this small sort of flag going on here. But for the moment, because this lower high formed, I think we are really trying to test the 20,700 before any sort of more macro move to the downside. And so if we can get above all those levels that we've been watching here, that 27 on the shorter term, and the more important one there is around that 21,400 with those peaks, those wicks up to 21.9. So basically, if you wanted a round number, call it 22. That could still be a bear flag on a more macro sense, but in the short term for trades, I think this market really wants to try and test those upper levels to see if the bulls are there, and if the bulls don't show up and the bulls don't come to protect this market, then the bears will say, sweet, not enough bulls here, not enough buyers, let's dump this thing because the liquidity is out of the market for the buy side, it makes selling a lot easier. So even the bears who want to short this thing because there might be better downside can in fact be buying the market to test if there are any more buyers coming in. They want to take supply off the market. This is basically the Wyckoff side of things, understanding the volume within the market and what the what the smart money is doing. They want to take the supply off the market, push it up, and then from that point after that, push it up just to see if there's anyone left. If there's no one left, then they can easily dump it to the downside. So that's what I think is happening right now, especially with this sort of lowish volume on the daily. You need to see that push through. So if the buyers are going to come through, you would then see much bigger volume as the breakout occurs around that 21.5-ish level. If not, downside. So that's Bitcoin at the moment. Remember the macro stuff we were looking at here on those videos that I had on the channel most recently. Bear trap, that's looking at a little bit more of a medium-term time frame, and then worst case scenario, going back to Bitcoin here, this was looking at a good buy zone, but this is going to happen over the course of months because I don't think the major low is in just yet, but I think we are due for a little bit of a move up to test some of those prices, exactly what I just talked about when it comes to the short-term stuff with the buyers and the sellers, just to test that upper side before they can push the market back down, if in fact that's what they're going to do. Then I think that has to happen on a more macro time frame as well. Push the market up a little bit, test to see if there's any demand, there's any buyers. If not, much easier to push the thing down eventually. And of course, we've also seen a lot of the bad news come out as well. Stuff with Celsius, and it seems like that's turning the corner. If it wasn't for, say, FTX, whatever FTX is buying, you got the Voyagers, and who else? You got Vold, and a couple of these other apps. Anyway, they've looked like they're getting thrown a lifeline potentially by FTX. Maybe there'll be some sort of silver lining to all of that. So maybe we're turning that low, and you can also see this from the fear and greed. Exactly what we've been talking about here. Pretty simple stuff. I'm no genius here, but pretty simple because we're looking at the fear saying, well, this might be the highest fear that we have ever seen for such a long period. We also had a pretty big period in 2020, but if this market comes down again, we might be putting in a higher low on the fear and greed index. We've put in a massive low at this point. You look at all these days that were around 10 and underneath 10 as well. So if we get that little bit of a climb out and then the push down again, the fear will still be extreme, but we might not get a low as 6. It might be 11 or 9 or whatever, and sit in that area. So that is what I think is happening at this point. You'll get that divergence, and that'll give us the macro signal that probably getting close to that bottom, and that's it. That's done. As of course it's macro, it's going to take several more months. We look at that on Twitter, of course on the channel. The Bitcoin dominance now for the crypto. So you can see what I'm talking about here in terms of the short term and the long term with Bitcoin. It all seems to be working out, but eventually the time will run out, and then people will wonder why they haven't been dollar cost averaging into Bitcoin at these lower prices, because they're expecting even further massive downside targets. And I don't think that'll happen at this stage, but I think this is a pretty reasonable time in these yellow zones. If you missed out on what this is all about, definitely go back to the worst case scenario video just a few days ago, and I'll leave a link to that at the end of this video. Now for the dominance here, forget these numbers. This is the pattern that I'm looking at here. Without the stable coins in it, essentially this is what the pattern looks like. We've basically broken out the dominance for Bitcoin, and it looks like it's just dropping back now. Of course, the dominance drops back. That means the market is running into cryptos. This excludes the stable coins, all right? So don't worry about these numbers. These aren't these aren't correct. It just doesn't include certain cryptos. It just does these sort of things. But essentially, I think we're just coming back, test the highs. It's a perfect support resistance flip. Cryptocurrencies have been doing pretty well against their Bitcoin value. That's when you know that the cryptos are going up and the dominance is falling for Bitcoin, which is a good time for altcoin trades, which is exactly what we've been looking at on all of these previous videos, even when some of the people, which I'm pretty sure they wouldn't have got to at this point in the video, think that I'm flipping from buy to sell every single video. That's not how it works. We're looking at a time frame, got an idea of what we think may happen and then trade that accordingly. And if it doesn't happen, then we have to flip and look to the other side. So in terms of Bitcoin, it has been climbing slowly out of these lows. It keeps testing those prices, putting in higher lows. That's still a bullish signal, even when the market's coming down. That's good for us and good for cryptos if we're trading cryptocurrencies. Cryptos are going up against their BTC value. You can see that here in the last 7 days. So, this is some sort of like quiet, secret sort of bull move on cryptos because it's not getting the same sort of publicity as what the crypto bull run did back in March. Everyone was thinking this was the most massive altcoin season that we could expect in the bear market because not everyone believed we were in a bear market at that point anyway. So we had a nice little run up here. Solana is just the proxy that I'm using right now. That definitely wasn't a period that I was buying, but this low, although I don't think this is the final low for cryptos, at least we've got a little bit of a move happening at the moment, and it is coming up to some resistance levels that it is really trying to test. I'm not a fan of the volume that is coming in at the moment, and I think it really needs to get a kick on with more volume. But as I'm recording this, Solana isn't looking too bad. We're at 38, just punched through 37, and you can see the resistance here. If we're getting nice and close, getting some tape reading on Sol, resisted at the exact 50% level here, $36.86. Look at that peak, $36.90. This is GAN analysis at its finest if it can read it nice and cleanly. $36.95, and then the market just closed above it. This is on the daily chart, and then this day at the moment is above that 50% level. So it took quite some 3 days to get to that level, find the support, break above it, start to get a little more volume in the previous days. Yes, we had the holidays with July 4th. Happy Independence Day to all the Americans out there, and then the move above to this level here. So the move is going well. This is what we were talking about in terms of the crypto trades. It took that extra little bit longer. Look, we got sold through a lot of this video. Every time I put a little bit of a Sol in the title, in the thumbnail, I'm probably talking about trading on Sol because there was quite a good move to the upside if it can break through all these resistance points. And we know from experience that the resistance points take a bit of time to break through because we've been smashed down so heavily. There's a lot of hurt people out there that are just going to try and take any profits that they can on the way up. They see Sol at 38, all right, sweet, I'm going to take that. They see it at 40, they see it at 42. These previous tops where it got rejected very, very cleanly off that last 50% level. And so now we've got the higher low. We're looking towards sort of $60 if it can break through 42, and then you've got just a few more minor resistance levels at 48 and 54. So keeping all that in mind for the trading, it is going okay. I want to see more volume coming to it to be more confident with the trade. Otherwise, I think we'll probably get a move up, maybe a rejection again at a slightly lower high than the previous one here at 42, and then a test back again at 36. Now, if that's the case, of course, you need that higher low again and a push above that level. But if you get the breakdown and then the retest to the underside, that's very, very bearish. That's very, very bearish, and you probably see further downside. So that's Solana at that point as a proxy for other altcoins, because a lot of them are sort of doing a similar sort of pattern here. If I get ADA, similar sort of thing. Those lows are coming in, it hasn't broken yet. That downtrend, it's really trying to push through that. There is a bit of volume, but it's just looking a little bit weak. It really needs to gain probably above 50 cents at this point. You can see all those previous highs in the last month or so, and it's tested it and then broken back down. So I think it really needs to recover 50 cents and then get back above. In terms of its 50% level from the low here to the top, again, 54 cents. So those tops there and that 50-cent level, there's a bit more work for ADA to do at this point, even though it's been holding up at these lows back from the 12th of May, which is a little bit stronger than the rest of the market as well. Cryptos looking okay. I think this silent bull run that is going on, this little secret move that's happening, has the potential to continue on. It is taking longer than I first thought, but that is pretty well due to the fact that it has been crushed. All of altcoins have been crushed for so long. It's been absolutely crushed since September in some cases, in the case of ADA, November for others, and it just needs this time to pull itself together and then try to test these upper resistance levels because it has been down for so long. So it's basically looking to try and form an area for a relief rally, and those are going to be some nice trades should we break through these levels. So that's what I'm looking out for here. Rest of the markets, nothing much has really happened, even though there's all this news about the Fed looking to crush the market again, and then all this fear. Not even concerned. It hasn't reached these prices yet. The second half of the cycle still on track. It's still looking reasonably good. Bitcoin, I think a lot of people are probably going to miss the bottom as they're expecting a lot, bigger crushes to the downside. We're looking okay at 20,700 here, 20,800. And then even we get those moves a lot further down, we'll look at that on the channel. So make sure you like, subscribe, stick around. I'm going to do some videos outside. I'm in Rome at the moment, and then tomorrow heading to Florence. So I'll do some outside stuff, just talking about the markets. Let me know if you want to see that and hear more of that rather than looking at charts all day. Comment me down below and follow on Instagram if you want to stay up to date with some of the videos and photos and stuff that I'm doing over there while I'm here in Rome with the family, and on Twitter. Guys, thanks again for your support. Catch you in the comments or on the other socials. Until then, peace out.